Good morning. Welcome to Expiration Friday and today's Market Intelligence Brief. I'm Matthew Buckley, call sign with Top Gun Options. Let's hit it. Let's take a look at our flight schedule and what we're going to talk about in today's MIB. Well, market was under pressure again yesterday, which is weird to say since we've seen this euphoric rise in the market. Doesn't look like it's going to be under pressure today. Why? Goog nailed it. They put it right in the wheelhouse, and the futures are up this morning, so we'll talk about that. Volatility is still climbing, though, folks. That's what's interesting. As options traders, we have got to keep an eye on our altimeter, the VIX, and it's still climbing, even though everybody's running around, whistling sunshine and lollipops. And finally, we'll take a look at some of the financials. JP Morgan did pretty well yesterday. Is that going to show the way for financials? We'll take a look at that Morgan Stanley diagonal we put on in Monday's Market Intelligence Brief. But let's get started. Folks, on Thursday, the market pulled back on Bernanke's backpedaling on his QE3 comments from Wednesday. But after hours last night, as you folks know, if unless you've been hiding under a rock, Goog put one right in the wheelhouse. Went transonic, up about $65 to $594 or 12% in after-hours trading. Absolutely insane. Google earned about $2.5 billion or $7.68 per share in the April to June period. That's a 36% increase from a year ago. Pretty nice. Now, the figure topped average analyst estimates. That's why it just went transonic. Revenue increased 32% to about $9 billion, and after subtracting Google's advertising commissions, revenue stood at about $6.9 billion. Not too shabby. And that also beat analyst projections. Now, I'll tell you what, folks, a short squeeze at the open. People who were short Google thought they were going to have a terrible quarter, could push Goog north of 600 this morning and help lift other techs like Apple, Goog, really provide some lift to the market. Even though our company, our country, our debt is on warning for review. Let me say that again, folks. In our history, has this ever happened that our country is being looked at for a downgrade in our credit rating? Pretty embarrassing. But hey, Google hit it, so let's all party today. But folks, Thursday, the equity markets in the U.S. continued to consolidate and were able to gain momentum after Wednesday dovish testimony from the Bernanke. Despite better than expected economic data and solid earnings data from the JP Morgan Chase, vol continued to rise with the VIX moving above 21, folks. This is important, so pay attention, to reach the highest level of the third quarter. Now, the VIX continued to trade above both the 50-day moving average and the 200-day moving average as investors continue to fear the potential for U.S. default if Congress doesn't lift the debt ceiling. We know that's probably not going to happen. If it happens, it'll be a couple days. It'll be ugly. It's kabuki theater. But the VIX closed up more than one vol point after climbing more than 6% yesterday. Now, compared to the beginning of the week, the VIX is higher by 30%. Did you hear that? Yeah, 30%. Wish I bought some VIX calls at the beginning of the week. Now, additionally, vol on crude prices rose. They spiked to 35 from 32, a 10% climb as as crude oil prices plunged during Bernanke's testimony to the Senate. Now, let's take a look at this. July 25 calls on the VIX are among the most actively traded. Now, one investor, check this out, bought 20,000 July 25 calls at 20 cents each. It's amazing. There was close to 60,000, 50,800 traded, I think it was. I think the premium purchases in these VIX calls are possibly short-term bets that market vol will remain high over the next few days. Now remember, the VIX July options expire next Wednesday, and open interest in the contracts is over 200,000, and that's the second largest open interest in the VIX behind the July 30 calls. Now, let's get back to Mr. Bernanke. He somewhat backed off his dovish position on Wednesday because the media and analysts ripped it apart, stating that the central bank was not prepared to take any further immediate action. So he's hedging. Great. Nice options trader. The chairman told the Senate committee that the situation was, quote, complicated, and that current inflation was higher than desired, although transitory in nature. It currently creates an environment where increasing purchase of assets, i.e. QE3, might not attain the desired effect. So on Wednesday, he was full of QE3. On Thursday, he backpedaled from that. So, folks, it doesn't matter. U.S. economic data yesterday initially helped to lift U.S. equity markets, but comments from the Bernanke put a cap on that upside momentum. Jobless claims did drop 22,000. It was seasonally adjusted 405,000 in the week that ended July 9th, according to the Labor Department. And the week's prior claims was revised to 427,000, up from an originally reported 418,000. And we're quibbling about little numbers here. But the economists that were surveyed had a forecast a decline of 3,000 new claims in the latest week. Now, the 4-week moving average of new claims fell by only 3,700 to 423,000, folks. But come on, we're still over 400,000 each week, which is absolutely insane unless, of course, this is the new normal. And if it is at this rate, we're all going to be out of a job in a couple years. Take a look at U6, the real unemployment in the United States when you get a chance. Now, that'll make your heart skip a beat and ruin the weekend. Now, folks, other good news was provided by retail sales, which rose by about 0.1% from the previous month to $387.79 billion, according to the Commerce Department. Now, economists that were surveyed had forecast a 0.2% drop in June. So the small increase followed May's decline, which was revised up from an originally estimated 0.2% decrease. So not huge moves in, retail sales, but a move nonetheless. And finally, folks, JP Morgan, JPM, the July 40 call was one of the most actively traded options on Thursday as shares rallied around earnings news. JP Morgan reported a second quarter profit of $1.27 per share on $27.41 billion in revenues. Now, analysts were expecting $1.20. So 36,000 calls and 15,000 puts traded in JP Morgan during the first 10 minutes. Implied vol in the options was down 17% to 26.5 compared to a 52-week high and low of 36.5 to 17.5. Now let's take a look real quick at our Morgan Stanley diagonal that we put on Monday. There's a quick shot of the VIX for you, folks. We're starting to reach that resistance level that we talked about in our MIB on Wednesday of about 21. So is the VIX going to go higher, or is this resistance level right here? But let's take a look at that Morgan Stanley trade that we put on that diagonal. Now, folks, what's a diagonal? Diagonal is when you buy leaps or buy long-term options and you sell the front month. So we bought the Jan 25 calls and we sold the front month, the 20s. And that's looking up about, where are we? Right about 2% right now. This is a great trade. Still, even if you haven't gotten into it yet, right now, I'd look at Morgan Stanley, take a look at Monday's MIB and why we're bullish on it. I'd still look at buying the Jan 13 25s and selling the front months, and we'll keep this diagonal on as long as we can. Matt Buckley, call sign Wiz. Happy hunting. Make sure you hedge. The market's open. We're already up 25. Let's take a quick look at Goog and see what it's doing. And see if we're having that short squeeze. Yep, right up there, close to 600. So we're going to see a short squeeze on Goog, up $68, or about 13%. So going to be an interesting day in the markets. Happy hunting. Make sure you hedge. We'll see you on Monday. Have a great weekend.